Hey guys, hope you're doing well out there. Today, taking a look at three companies in the payments processing space, namely Visa, Mastercard, and an American Express, and kind of comparing them against each other. We'll take a look at their valuation metrics, determine our fair value for each of these companies, and then take a look at their stock charts. As always, if you are new to the channel and find this type of content valuable, be sure to hit that like and subscribe button below. We are on the road to 600 subscribers, and your support would mean a lot. Now, before jumping into the analysis for each of these companies, I do want to take a look at them on a general price to earnings basis and sort of compare them against each other. We have Visa in orange, Mastercard in blue, and then American Express in purple. On that traditional price to earnings basis, Visa and Mastercard have always traded at a higher multiple compared to an American Express. And the big reason for that, you might be wondering, is the margins. You can pull up a chart of operating margins, net margins, gross margins, whatever it may be. Here I have the net income margins, and you see Visa and Mastercard far exceeds the margins over at American Express. Visa even has net income margins of over 50%. Guys, I'll say that again, net income margins of over 50%. I'm sure you can probably count the number of companies in the public markets doing net income margins of over 50% on your fingers, maybe even just one hand. And so when you see American Express having a net income margin of roughly 14% over the last 5 years, whereas a Visa and Mastercard having margins of 50 and 43% over the last 5 years, yeah, that will certainly cause you to deserve a higher multiple on your price earnings if you're Visa and Mastercard. And that's exactly what's happened. Now, over the past 5 years, you see even Mastercard has been trading slightly always higher than a Visa, and that's primarily due to their growth rates, as Mastercard does have a slightly higher growth rate compared to a Visa. Now, jumping over to Visa's analysis, this one is up over 26% over the past 1 year. Year to date, up over 13%. It does pay a small 0.7% dividend. That comes out to be roughly $1.80 on a per share basis. Now, this company is expected to post $9.84 on that bottom line in 2024. And so if they're doing $1.80 of their dividend, that certainly has room to grow considering this EPS number. Now, they are expected to grow in that sort of low double digits range on that EPS and revenue side for the foreseeable future. Now, moving over to the numbers over at Visa, this one over the past 5 years has grown at a compounded rate of 10% for their revenues and roughly 12.7% on their bottom lines. You see EPS for 2024 is expected to be that $9.84 number. That would put net income at just a shade under $23 billion. Now, for their upcoming 5-year CAGR on that bottom line, I took that to be 14%. Here on Yahoo Finance, analysts are expecting Visa to do roughly 14.76% compounded annually for the next 5 years. I took that just under that at 14%, being a bit more conservative with my estimates. Applying a 20 times price to earnings multiple, certainly I don't think Visa will be trading at a price to earnings multiple of 30 or even 40 times in the next 5 years. If their growth rates do come down, I think 20 times price to earnings does seem reasonable considering how high their gross margins really are. And then taking a share outstanding value of roughly 2.3 billion shares, you see Visa has been doing a steady number of share buybacks over the past, we'll call that 7 years. You see every year they've been buying back roughly anywhere between 2 to 3% of their shares outstanding. And so I took a share buyback rate of roughly 2% over these next 5 years, taking a discount rate of roughly 11.2%. We know Visa does pay a 0.7% dividend, and so that would bring our overall rate of return at roughly 12%, which is what we want. And then applying a 10% margin of safety, we come to a fair value for Visa at roughly $221. This is roughly 5% lower than where the shares are right now at $235 per share. And so Visa, not wildly overvalued, certainly it's very close to my fair value at $220 per share. If you come over to the sensitivity grid for Visa, certainly if you think Visa can do maybe 16% on that bottom line growth rate, and then you apply a 20 times multiple, yeah, your fair value will be closer to 242, in which case Visa as of now would be underneath your fair value, I would take my estimates at roughly 14%, applying a 20 times multiple, bringing my fair value at roughly $220 per share. Certainly, I think 14% growth on that bottom line is not outrageous to expect from a Visa. Moving on to the technicals over at Visa, this one has been locked in a steady uptrend you see really over the past 1 year, and anytime it comes down close to the bottom end of this range can absolutely be a phenomenal buying opportunity. Now, it most recently tested this range during the first week of October and is now headed higher. I see the first level of resistance for Visa at roughly $250 per share, and then roughly $253 per share is the top end of this range. Certainly, if you take an even farther outlook on Visa and you scroll back over 5 years, this one has been steadily going higher. And so Visa is one of those stocks that you can sort of always rely on. It has phenomenal dividend growth. And so if you are looking to come in here and pick up shares of Visa, anytime it's really at the bottom end of this range, I wouldn't blame you. I personally would get more excited for Visa if it falls out of this range and then heads lower. The first level of support for that I see at roughly $210 per share. That would also be roughly $10 below my fair value for Visa. Really anything in that $210 to $220 per share would be a great spot to maybe open a position in Visa, and then perhaps if it trades sideways for an extended period of time, there you could build out a longer position in Visa. Overall, I just think it's a very well-run company and one that I think you can easily buy on any dips. Moving on to Mastercard, this one has performed even better than Visa over the past 1 year. It is up 30% over the past year to date, up 14.5%. This one does have a smaller dividend, close to 0.58%. That is $2.28 on a per share basis. Now, Mastercard is expected to grow slightly faster than a Visa in that high double digits range, close to 20% on that bottom line for the foreseeable future. In 2024, they're expected to do $14.50 of earnings. So even Mastercard having a lot of room to grow their dividend, perhaps do share buybacks as well, and pay down debt. Taking a look at the historic numbers over at Mastercard, this one has done roughly 12.1% growth on that top line over the past 5 years, and similarly 12.2% growth on that bottom line over the past 5 years. You see in 2024, Mastercard is expected to come in with $14.50 of EPS. That would bring a net income number of just over $13.7 billion. Now, for Mastercard's next 5 years of growth, I took that number to be just 15%. Analysts on Wall Street are closer to 17% for the upcoming 5 years on that bottom line. I did take slightly more conservative estimates. I think Mastercard is a bit more uncertain. In some years, they do post better than expected growth, and then some years they come in with slower growth. And so I took that at 15%, applying a 21 times price to earnings multiple, a shade higher than Visa, certainly because it's growing a shade higher, faster than Visa as well. Taking shares outstanding at roughly 950 million. Mastercard is also steadily buying back shares. I took share dilution at -2%. Taking a look at the shares over at Mastercard, you see they have been buying back shares at roughly that 2% clip over these past 7 years, and so we can expect that to continue over at Mastercard, applying an 11.4% discount rate as they pay roughly a 0.6% dividend yield, and then taking our 10% margin of safety, we come to a fair value of roughly $355 per share. That is roughly 10 or close to 11% downside from the current share price of $397. So again, certainly not wildly overvalued, but I think Mastercard would need to come down roughly 10% in order for that to make sense for me. Now, taking a look at the technicals over at Mastercard, this one is very similar to a Visa. It has been channeling upwards, and sort of anytime it comes down to the bottom end of this channel can be a great buying opportunity. Now, the first level of support underneath this channel I see is close to $368 per share. Certainly at that point, it will have come down roughly, I want to call that 5% from the current levels, and then below that is where I would really get interested in Mastercard at roughly $346 per share. That would be a more than 10% drawdown, 11% drawdown from current levels, and so that is, I think, where Mastercard can certainly become interesting. It does follow a pattern very similar to Visa, as it makes these channels upwards and then sort of consolidate sideways over an extended period of time. But really, honestly, if you're looking to gain exposure into Mastercard, really any substantial dips can be bought. I think this is again, very solid company. It has a very strong business model, terrific operating and gross margins. And so I think Mastercard, similar to a Visa, can be bought on any major dips. Moving on to American Express company. This one is slightly different from a Visa and Mastercard and sort of plays in a different space as well. Their customer base is more for high net worth individuals, and they generally have a smaller customer base than a Visa and Mastercard, which caters to really any credit card and debit card consumer out there. So American Express returning only 5% over the past 1 year. Year to date, this one is up just 1.5%. Does have a higher dividend yield at close to 1.6%. That is $2.40 on a per share basis. Now, American Express is also expected to grow in that low double digits range for the foreseeable future. In 2024, they're expected to do $12.38 of EPS. So American Express also having plenty of room to grow that dividend or continue to do buybacks or even pay down debt. Taking a look at the historic 5 years over at American Express, this one has grown at a smaller clip compared to the other two. You see revenues over the past 5 years at American Express have been just 9.5% compounded annually, and then EPS has been close to 10.7% compounded annually. In 2024, they're expected to do close to $12.32 per share. That would be net income of close to $9.1 billion. Now, for an American Express, I took their 5-year expected CAGR to be roughly 10%. On Wall Street, analysts are closer to 14.5%. And so I took my value to be a little less just because I think American Express doesn't have the same margin of safety that a Visa or Mastercard does. Their net income margins are certainly lower. And so I would like to price in a smaller growth rate on that bottom line just because I think they don't have the ability to kind of drive more revenue down to their bottom line. And then because their bottom line and growth rate are far lower than a Visa and Mastercard, I did take their price to earnings at roughly 12 times. That also lines up historically. You see American Express has sort of traded in that 18 to roughly 15 times price to earnings multiple over the past 5 years. And so taking 12 times price to earnings for the next 5 years certainly makes a lot of sense. And then applying similarly another minus 2% share dilution, we come over here. American Express has been buying back shares fairly fast. You see some years they even bought back 5.5%, close to 6% of their shares outstanding. And so American Express certainly has the room to continue to do that share buybacks. I took share dilution at just minus 2% and then applying a 10.4% discount rate because American Express does pay that 1.6% dividend yield. We come to my fair value for American Express, roughly $144 per share. That would represent just a 3% drawdown from the current prices. And so you can make a case that American Express is the most fairly valued stock out of these three based on my estimate. Certainly if you come over here to the sensitivity grid for American Express, if you think they can do 14% growth on that bottom line and then applying a 14 times price to earnings multiple, your fair value would be closer to $200. This is a stock that's trading at roughly $150 per share. And so in that case, you can say American Express can be far, far undervalued. But certainly I think the growth rates over at American Express need to be sort of managed. And it's better to come in with conservative estimates, especially when they don't have the same net income margins as the other two companies. Moving on to the technicals over at Amex, this one is slightly different compared to a Visa and Mastercard. You see, over the past 1 year, it hasn't really done much and sort of been consolidating sideways in this channel. Now, sideways consolidation is not a bad thing. Certainly in stocks that make huge run-ups like an Amex did over the past few years and then has sideways consolidated really for a long time, that's not a bad thing. In fact, that can be a good thing, especially if you are looking to accumulate stocks like this. And so in my opinion, the first level of support for American Express is right where it rebounded just in the first week of October, roughly $145 to $146 per share. That is a level of support that is held numerous times in the past. On the other side, the level of resistance I see for American Express is at roughly $165 per share. Certainly between this range, American Express can be a good swing trade opportunity, as it does tend to sort of come down and then make its way up to the top end of this channel. And while American Express is trading close to my fair value, I wouldn't come in here and absolutely say this is a screaming buy. Certainly, I think you can come in here and maybe nibble on a few shares if you're looking to maybe create a 10 share allocation for American Express. Pick up maybe 1 or 2 shares anytime it comes at this $145 range or even falls below it. Certainly, I think Visa and Mastercard are a bit more compelling to me, even though they trade at a far greater price to earnings and just overall trade more expensive than an American Express. I think that is deserved considering their phenomenal net income margins and just the ability they have to grow their dividends in the near future. Now, if you don't want to come in here and pick winners and losers, if you don't know if Visa or Mastercard or American Express is the better buy for you, you can absolutely come in here and take a look at the Financial Select Sector S&P 500 ETF, ticker symbol XLF. And this ETF has top 4 holdings of Berkshire Hathaway, JP Morgan, Visa, and Mastercard. And so right there you get exposure to not just Visa, Mastercard, but also Berkshire Hathaway, which I think they have roughly a 7% holding in American Express, as Berkshire owns roughly 20% of American Express shares. And then you also gain exposure to your traditional banks such as a JP Morgan, Bank of America, Wells Fargo. And so certainly this ETF can be a great way to kind of gain exposure to the financial sector, gain exposure to payment processors and banks all together and in sort of an equal weight way where not one of them is sort of overshadowing the other. And so you don't have the risk of sort of picking the one that underperforms in the group. In my opinion, I think all 3 of these companies will do tremendous down the road. I personally feel like Visa is the best buy out of all of them simply because of their net income margins, gross margins, and just the fact of how well this company is run. I think Visa is one of those steady buy and hold stocks that give you that great capital and dividend growth in your portfolio. Let me know your thoughts on Visa, Mastercard, and American Express in the comment section below. Do you agree with my fair values, or do you think the fair values for each of these companies should be higher or lower? Let me know in the comment section below. As always, thanks so much for listening, and I'll see you guys in the next video.